Good morning, everybody, and this is your S&P 500 day trade setups for today. So, yeah, what do you guys make of this? I suppose. Let me know in the comments below what your first impression is before we get into the video. Quickly type them now. Okay, so for me, right now we have another level which we have been highlighting for quite some time, and this is this 4277, and you can go all the way up to 4300. So 4300 is pretty much the key, and I think if we can clear that and stay above it, we definitely have a potential for at least a continuation back to that trend line, which would then be the retest of the 155 EMA. However, if we just switch across to the weekly quickly, look what is forming. And true with what's happened in the past in this zone, pin bars. You can see pin bar, double pin bar, tweezer bottom formed there, big engulfing bar formed there, massive pin bar formed here, which didn't play out, although we never breached the bottom. So you could argue that it is still very much in play. That's this pin bar here. This pin bar here is not so much in play anymore. We had a tweezer top there, and then we had a pin bar to the top, and now we got a pin bar at the bottom forming. So everything to play for at the moment is 4,300. So I would, argue that confusion still reigns. We do have a crossover. This diversions are starting to play out, and oscillators moving to the upside. So if we just start dropping down through the time frames and start having a look here, you can see tails the upside, tails the downside, tails the upside, tails the downside, big moves up, big moves down. I mean, yesterday, some of the NASDAQ shares, particularly Google and Microsoft, were up 3.5%. A day before, they were down 3.5%. Facebook had some really stellar results, and the last I saw, they were up something like 20%. And if let me just head there and just have a look where they finished. Meta Platforms closed at 17.5% up due to the results that they had. I don't know if you remember last earnings cycle, there was so much fear around Facebook, and the market was like, oh, we're going to get rid of Facebook out your portfolios, going to break, it's not going to grow anymore. And look at it a quarter later. Anyway, that's just the way the market is at the moment. There's so much noise and so many people trying to predict a crash, and so many institutions making money off shorts that they try and influence the market by putting out a narrative that is negative to a lot of the large cap stocks. Tesla's a great example as well. So much negative narrative about how it's going to crash. Yet to see it crash. Same with the S&P 500, and every bull, or every calm bull, is just sitting patiently and waiting, while every bear treats every sort of red bar as a major crash, and then you can see the internet flooded with that noise. Anyway, I think our job is really to eliminate that noise. Stay away from it. Don't listen to it. Don't pay attention to it. Take your cue from the weekly on this one. We are in a very strong uptrend, and every single uptrend, markets don't keep going up and up and up like this forever. They need some area of consolidation, and this is what's happening. It's volatile, I'll give it that much. There's wild swings, there's wild moves. It's not measured and structured like, for example, in 2017. I mean, this was one of the most boring years ever of trading. You could put on a massive trade with a tight stop loss and still be guaranteed of not being shorted out or stopped out. So, and then you can see what happened after that, an area of volatility, and then a continuation, and then more the 2018 crash there, and then the recovery, and then you had our virus fall here, and then the recovery, 2-year recovery. And now we're sort of consolidating. I really, to me, this is just consolidating. You need to just pay attention to what's going on. Anyway, looking at the hour, pretty strong case for an inverse head and shoulders here. So there's your left shoulder, here's your big head, and we're busy forming the right shoulder potentially. We did sell off the 155 yesterday going into the close, came back a little bit, and pay attention to what happened. We sort of dropped below this area and then came back to close at it. So this is kind of where the market closes, and then there's a drop on the futures market, and then it sort of comes back up. So at the moment, look to the left, a lot of tails here, another tail, cross over the moving averages, oscillators, not sort of grouped to the upside at the moment. A little bit of divergence here on this, but that's to be expected with the 155 here. For me, the line in the sand is a 4,300. We get above it, then I start reevaluating and start looking for an opportunity to see whether we have a bottom in or not. So for now, at the moment, 15-minute trade is probably the best way to go. Yesterday, as I said, yesterday was a sit in hands day, and you can see why. Sort of consolidating in amongst moving averages, break up, quick scalp to the top, quick scalp to the downside, and then as the market opens, another just crazy move to the upside. Suppose you could have just traded off the oscillator if you really wanted to. Not that I like doing that. I like to see a level as well. Anyway, sitting on hands yesterday. Today being Friday, if you do trade at scalps, you don't want to be holding over the weekend. Have no idea what's going to happen over the weekend and into next week. So if we do get above 4,300, I mean, how far is that from where we are? It's 0.79%, 0.8, almost 1% from where we closed. Well, it probably is 1% from where we closed. Yeah, 1.2%. So what I'd be looking for is firstly a move to this area here, and then possibly sort of just a range or a breakthrough, and to hold it. The bulls are going to want a weekly close above 4,300. They get a weekly close above 4,300, it's game on for the bulls, as far as I'm concerned. If they get a rejection of 4,300, then I suspect we'll probably range a little bit more. Then this is going to be the up end of the range, and the bottom end of that range is going to be around 4,120, 4,100. That's kind of the scenario that I see playing out. So yeah, everything to play for at the moment. We are making higher lows, as you can see, 2 days of it on the hour, and we are making higher highs, and that's 2 days of that as well. And normally these turning points or bottoms are normally quite volatile. Doesn't matter which way you look at it, and doesn't matter which time frame you look at it. When you get to a sort of major level, these turning points are very, very volatile. You know, V reversals are extremely rare, although they happen more often than not on the S&P and the Dow than any other market. So this is the thing to watch out for, 4,300. We start closing above there, then I would argue that we have a bottom in, and we need to start looking for upside targets. And there are plenty of upside targets. You know, there's trend lines, there's major swing lows, there's a major sort of breakout here that hasn't been tested as well. So those are the areas that we're looking for. We're looking for 43.74 and 44, I suppose that's 44.20 area somewhere, depends when. Well, that's if you get there today. I don't think we'll get there today, but it'll be around, I think it's 43.34 area, 43.50 is probably going to be the upside target if we do clear 4,300. So I'm not looking for shorts at the moment, definitely not looking at shorts. I'm more leaning toward building a base and seeing if we can get that base. So pay attention to 44.65. That's our first scenario, but then just look a little bit lower than that, and I would go as far as taking this swing high here. You can see that's kind of where we found some support as well. Lots of tails in this area as well. So this is the zone I'd be paying attention to. So if we do drop down into 44.65 and down to 42.46, great opportunity for a long and pretty wide stop loss. That's going to be a very small position. So you've got a 660 point stop loss. So small position, very wide stop. And your first target is going to be kind of this 579 area, so that's less than a one-to-one trade, not ideal. But if we do break that, my first target is going to be up here at where's that, 43.70 area, and that's a 1,200 points. So that's a 2-to-1 trade. So that's kind of my setup for the S&P 500. Will it happen today? Not so sure. We may just stay between these moving averages and range today, but if we do break up above 4,300, it's game on. If we break below 42.46, then the bears are going to have control, and then I would be curious to see where the weekly is going to close. But if we do break the downside, I'm not really interested in chasing that short, because I have a feeling there'll be more buyers waiting at the bottom here, as there has been most of this week. Anyway, that's kind of my view today. Looking for the breakout, looking for potential long, not looking to chase shorts, not based on what the higher time frame charts are telling me. Hope it helps, and enjoy your weekend. We'll catch up with you on Monday. Cheers for now.